Thank you, everyone. So let me first of all give another round of applause to Brad for the wonderful. I'm also going to take the opportunity to give a shout out to the rest of the Wave team who are here. There's a much bigger team outside, but Susan, who I think Brad mentioned, has been instrumental in branding Wave to today's level. I think for the company name to become a verb, and for people to really acknowledge and understand how mobile financial services is used, I think that's it's great effort, but also great achievement. So that's Susan. And I want to also just introduce Amrit. You can stand up. Amrit used to run Grab, actually launched Grab in Myanmar, but he's now with Wave, and he's in charge of rolling out products. So a lot of the questions on what products we can have, etc., he's the one who's driving that. So the three of them, I think if you have any other questions, please come by afterwards and ask them. I would also say that a lot of questions was on distribution and how we rolled out the agent network. And in fact, we've been able to get one of the best, probably the best distribution head from Telenor, who was transferred into Wave. And he's been instrumental in a clustering strategy to make sure that we have the right resources dedicated to the right regions. And that's really driven our agent expansion in a profitable way for us as well as for agents. I think that is the critical competitive barrier for others or for us. The ability to have a lot of agents, it needs to be coupled with the fact that we need to be profitable, but also the agents needs to be profitable. The agent, you can have a very big distribution network, but if the agents are not profitable, not only would they not be an agent for long, but also they would not provide good service. And we've been able to give that balance. So if you see the growth of the business in the last couple of years and the growth of the agent, the growth of the commission has outperformed the agent growth. And that allows agents to be earning more and more. Increasingly, agents find this to be a very essential part of their livelihood. So I think that is great work that we've been doing to grow that network in a very healthy way that will allow us to basically dominate this market. Shifting gear a little bit, and I know it's been a long morning already. I'm going to make this quite short, so please stay with me in terms of attention. But I just want to give a very quick update on Yoma Strategic. Let me see how I can use this. Okay, so three key things I want to say. One is how Wave fits in with the overall Yoma Strategic strategy. Now, Wave, of course, is independently run. We own 34% of that. But it really provides an overlay to our overall business. I've always said that Yoma Strategic is a dedicated business to Myanmar, specifically to the consumers within Myanmar. So if you look at our various businesses, you have our leasing business, which is part of our financial services. The most critical part of leasing is funding, access to funding. But the hand in hand with that is the ability to credit score. So what we're doing with Wave is really an ability to start identifying who the end customers are and understanding their risk profile and eventually have a much better quality credit scoring for them. On the consumer side, on the payments, this is able to drive us to be a lot more efficient, but also eventually drive us to be a lot more able to target customers very specifically. This could be targeting students who go past a particular KFC who may be interested in a particular meal, or it could be something else. But overall, the ability to use technology and embed it into our overall business to generate more traffic is going to be very important. In the real estate market, which I'm going to talk about, we're launching City Loft, which is a lower price point market. This is going to be very critical for our future if we're able to make it successful. An integral part of that is to be able to make payments and receive payments very successfully and track where the customers are. Again, Wave can play a very important role. Of course, you have automotive, etc., but you're increasingly seeing the ability for us to wrap technology around our businesses. There's a lot of talks about conglomerate discount, and we're very wary of the fact that we have a conglomerate, and it's hard to value, let alone really understand how it provides synergy for each other. My from my perspective, I think we're entering into a new age where technology is going to play a disproportionate role in generating traffic, generating customer leads. And I very much hope that Wave will be a very important overlay to allow us to generate more and more business across the different divisions. We made, so that's the first thing I want to say. The second thing I want to give an update on is we made an announcement in our Yoma Fleet business, which is a partnership with Caterpillar. Caterpillar is one of the largest brands in the world, but in Myanmar, they are one of the largest construction equipment distributor. Actually, not just construction equipment, but generally heavy equipment. The two biggest sectors that they target are construction as well as mining. Now, this joint venture is a partnership that will allow us to do two things. One is the local Caterpillar dealer called MSP Myanmar is extremely successful in distributing to all the local construction and mining companies. And a lot of those units are basically rented out. The rental model is very simple. You know, if you have a bridge to build, you may only need equipment for, let's say, a year. You don't want to buy the equipment, so you rent it from Caterpillar. The rental yield is extremely good. So our partnership will provide them all the funding that they need to build out a much larger portfolio, at the same time share on that profit. And it is very profitable. In fact, it's potentially much more profitable than our vehicle leasing business. So that is rental. And then the other part is they have a lot of customers who would like to get financing and will be the preferred finance provider for these companies. But it goes down to what is the next stage of growth for Myanmar. And in our mind, construction has to be one of the biggest part of the growth, specifically for infrastructure. I've been preaching this for a while now, but finally we've seen the first contract that was signed, a major contract between China and Myanmar. This is part of the Belt and Road Initiative. And the Jaipur port have been signed between CITIC Group and the Myanmar government. That is I think it's around $1.3 billion construction, which is funded by China. It is actually rightly sized. It's not too big. Originally, the project was $7 billion, which China would be very happy to fund. Now it's at a funding level that Myanmar feels very comfortable with. But $1.3 billion would allow a lot of jobs to be created and a lot of construction to be done. You're also seeing the new Yangon City, which is likely to be a $1.6 billion contract that is again led by the Chinese. These are, and more of these are coming, the railways, the deep sea ports, the industrial zones, the new industrial zone next to the China border. All of these are new infrastructure projects designed specifically to create jobs and enable more efficiency, which is something that I think the country really needs, particularly in the political climate now when we're heading into the election in the next 2 years. So that is on the construction side, and I think Caterpillar, particularly our partnership with Caterpillar to provide leasing would be, to provide financing would be very critical. The second part is the mining industry. Myanmar has always been a big resource country, and the mining law is in the process of being redrafted, is about to be signed. There's some exploration already happening, mostly with international players. Caterpillar machines are extremely suitable for the mining sector. If you look across Indonesia, etc., this is where, this is the time, the taking off of the mining sector would drive the taking off of the heavy equipment sector. So we really think that this partnership has a big future, particularly if these two sectors come on stream. The business without that has already been growing very fast. If you look at the chart on the left, you see that we've been growing at a clip of 30% or so year on year, 30% plus year on year in terms of the vehicle fleet size. But what is more important in some way is the fact that this business is particularly profitable in Myanmar. This goes back to my point about the banking sector is being bypassed in the financial system. So in terms of providing financing to individuals as well as to companies for construction equipment and for cars, we find that the Myanmar non-bank finance sector to be extremely interesting. So Yoma Fleet from a from a return basis, if you compare to other non-bank finance companies, compare very favorably. So you're combining a very high return model or market with a very high growth market. It is, we've been projecting out our growth, and actually you have to go the other way. You can't look at how much we have or how big we are and apply a whatever percentage growth. In fact, the next wave of growth is going to be when you have infrastructure, when you have mining, and we have the logistics business become of normal size, not even a very large size, but a normal size. A lot of that will need to be funded, and I think we will play a disproportionate role compared to the banks in funding that. So this is a very exciting area. Last but not least, I want to do this quickly so that we can move on to just casual mingling. We've just launched City LOFT. City LOFT is a new division that we are launching in our real estate business under Yoma Land. Specifically, it targets the middle income area where people cannot currently afford a new home. The market in the past has been very limited in terms of financing. So people have to buy using 100% cash down. That is only affordable for people who have a lot of wealth. For the mass market who have not had the first home yet, they are basically priced out of the market. So what are we doing? We're doing two things. One is we're providing a product with the right price point, which is substantially lower than what we had before. Now, these are not kind of very informal units that are just small apartment units that is ad hoc. We're talking about a mass market, a bit like an HDB, but very large volume units. We're pricing these at $85 per square foot. We believe it's quite competitive. But together with that, we're combining it with a long-term mortgage plan. Until a couple of years ago, banks were only providing up to 5 years of mortgage. Today, together with the City LOFT plan, we're going to be providing 25-year mortgages. So for the first time, there's genuine ability for people to actually take on a mortgage and pay a percentage of their household income to service that to buy their first home. We believe that's a huge market, particularly in the context of the urbanization that we expect to see. So on the right, you have a chart of the population in Yangon. And you can see that in the last 20, 30 years, Yangon population has increased dramatically. But more importantly, we expect that trend to continue. In fact, with all the industrial zones, et cetera, being built in Myanmar or in Yangon, we expect the population to grow to 10 million from 6 million right now by 2030. It's a big housing problem that we need to solve, and we believe City LOFT would be a big part of solving that. So this is a very exciting plan. We were able to do a pre-launch of this project, a smaller pre-launch, and within a week, we were able to sell half of the first phase, which is 250 units. That contrasts with what we had in Star City over the last couple of years, where we had quite a slow market. In fact, if we're able to sell 250 units in the next month or so, we would have achieved a sales volume that is probably about the same, a lot higher than what we had in Star City over the last couple of years. So a big business area that we're launching into, we're very excited about. We will not only use our land bank, but if successful, this will become a product that we can use on other land, and we can work potentially even with the government to roll out this for the mass market. So we're turning slowly into, in real estate, into a much wider offering, not just the high end, which we have in Panlai, the middle market, which we have currently in Star City, but also the lower end. Apartments will be sold between $25,000 to $70,000 US per apartment. And together with a long-term mortgage plan, we're talking about a few $100s a month of mortgage payments. Just a little bit of schematics on what the units will look like. This is the first day of the pre-launch. You have a lot of people picking units already. And that's it from me. So all in all, we just announced results last week. I think in the context of a relatively kind of subdued sentiment in the country, a lot of people concerned about whether the economy will grow as fast as we had in the past. We actually see the underlying business growing quite well. Whether it's consumer business, which has a good same-store sales growth, as well as the total store growth. We've also, from a leasing business, even in real estate, we're seeing a good sign of growth right now. So I feel in some ways the bottom has already gone past, and we're now in the recovery phase. We are much more focused on dedicating money towards the right areas of fastest growth. And within that, financial services in leasing as well as wave money will play a very large role. I think I'll end it right now. I'm not sure if people have any questions, but I think it's probably better for us to move on to just casual mingling. And if you have any questions, please come up, and I'm happy to answer any questions. In the meantime, any questions right now from the floor?
In particular on inflation, cost of capital, because I was just looking at the currency. It's been depreciating at 10% per annum for the last 10, 20, since it was floating. Would that trajectory change, and if so, how do you see it?
So we would expect the currency to depreciate at a slower pace in the coming few years, but still on a depreciation trend. I think most of us are modeling probably somewhere between 5 to 7% a year of depreciation. That is actually partly, of course, that has an impact on all the financial models, but it is also hopefully going to drive the export market, which is very important for the country. In terms of inflation, we've been going at around a 5 to 6% inflation rate. Overall, we see that the government, for the first 2 years of their administration, have actually kept inflation in check. And it's only in the last, I would say, a year or 6 months when the currency starts depreciating that inflation has started ticking up. Overall, I think, again, the economy is still growing at a reasonable rate. It's not quite at the 8.5% that we were seeing 4 years ago, but 6.5% is still respectable. But that is in the environment where the government were very reluctant to take large-scale infrastructure investments. So as I mentioned, the Jiaopio Port, 7 billion project that was funded 100% by the Chinese, that was basically on hold for 5 years. And finally, we've signed a much smaller version to avoid this issue of a debt trap. So I think you're seeing the government more keen to make sizable investments to unlock the potential in the economy. And I would expect the growth to start picking up from that point.
Melvyn, since Grab was mentioned, I guess, my question is, how does Grab wrap into that technologies or wrap of yours? What was the original intention? Did it revolve mainly around the leasing side, or was it also now with money in the picture? How do you expect that to play? Yeah.
For Grab?
Yeah, for Grab.
So we have we've announced this overall partnership with Grab, which is rather broad and frankly not specific outside of the leasing area. So in leasing, the intention is to jointly form a company to own taxis, get taxi licenses, and lease them out to drivers. I think whether you see Uber and Grab, etc., they have this as a pretty good model to allow taxi drivers to own a newer vehicle, but at the same time for us to manage our credit risk by directing business towards the owners. So I think that is still the intention. What we're trying to do is work with the government to scale how many new licenses they should give, actually. In fact, the government has, the Yangon City has an issue of too many taxis in a very poor quality. So the macro direction is to dramatically reduce the number of taxis by canceling a lot of licenses, but then giving out to larger enterprises to allow better management of these taxis. I think that's going to take another months to sort itself out in terms of scaling the right number. We could do 100 taxi pilot, but in a way that doesn't give any information to the government on what they should do. On the bigger question of what's the ambition for GrabPay, I think as Brad said, it's really hard to judge. I would say that many companies have come in and tried to provide services without license. And that has not been very, I'm not saying Grab has done that, Grab has not done that, but even the likes of Alipay, a lot of taxi drivers are now starting to take Alipay payment because there's so many Chinese tourists. But the central bank came out, I think, a couple of weeks ago, with a very clear notification that Grab Pay, WeChat Pay, these are not legally allowed. And basically, they've asked these operations to cease operations in Myanmar. I think it's a very clear sign that whoever operates needs to be licensed. So far, the licensing regime has been focused on giving permission to experienced operators in either the banking sector or the telecom sector. So we could have actually got a license a lot earlier by using just our banking license under Yoma Bank. In fact, we waited a lot longer to get the mobile financial services so that the license sits within Wave Money, which allows us to have much more control. And frankly, allows us to have much lower KYC for customers. Remember, Wave is focused on banking with the basically serving the unbanked. So we don't want a very complex KYC system. But to answer your question, or actually to not answer your question, I don't know Grab's intention. I only know that whatever they do, they most likely would need a local partner. And we are the dominant player, so ask them to call us up.
Melvyn, in your ecosystem, you mentioned the number of other consumer brands, FMCG and so forth. Has Yoma already taken any positions in those for Myanmar?
Yeah, so in the consumer segment, we've launched KFC over the last 3 years. We now have 26 stores. That will continue. We actually have announced also that we have a hot pot brand from China, under Yum China, which is Little Sheep. That is going to be rolled out by the end of this financial year. We just announced last week that we've taken on a franchise for Auntie Anne's, the pretzel. So what else can I say? We're in the discussions with a number of different brands. We do have an ambition to have a lot more brands. We've set up a target of 6 brands over the next 3 to 4 years and 125 locations. My hope will be that we'll get to 4 by the end of this year. And so 6 is actually not a very stretch goal. So that is in the F&B restaurant segment. We, of course, have our partnership with Pernod Ricard, and we've just rebranded our local spirit into Seagram's High Class. So there will be intention to launch other brands in partnership with Pernod Ricard.
Any ambitions in FMCG or pharma?
Not right now, not other. So we're focused on food and really focused on distribution to logistics, beverage, as well as the restaurants. Any other questions? If not, then I think I'm here. Brad is here for a little bit longer before his CNBC interview, but we're happy to take any questions and any advice from you. Okay, thank you.